Mahesh Miswin speaking with us. Okay, Mahesh, good morning. Thank you very much for joining us. First up, why did crude prices rise? One would have thought that after the deal you should actually see crude prices fall, but yesterday we saw them ticking up again.
Yeah, I think initially we saw the sell down on Brent until 56.50. But the important thing here on fundamentals is that the Iranian nuclear agreement that they've done in Vienna still needs to be approved within Congress in the US. Now they've got 60 days to verify that, and that is a period which is fairly important, because that, even though Obama has said he would veto any negative decision from Congress, it is still fairly important. So that's one reason why the oil markets still haven't factored in the weakness at the prompt. But the other reason is also to do with the fact that even after we get the Congress approval in September, actual oil from Iran is only expected to hit the market in Q4. It's not hitting tomorrow, it's not hitting next week. Actual incremental oil only hits the market mostly in Q4 and beyond. So that's the other factor as well, which is at play.
All right, Miswin, hi, morning. Are we celebrating too early on crude? When does the Iranian oil hit the markets, you think?
I would say there's still a few more roadblocks to go through. In terms of Iran's oil actually hitting the market as well, we know that the first tranche that would hit would be the 40 million barrels of oil that Iran has on oil tankers. Now, that's the one that we expect to be released first into the market, especially after the European insurance sanctions are removed on tanker shipments. The second aspect of it is actual increase in production. Now, Iran has got the 5th largest oil reserve in the world, and they are opening up their oil sector again to foreign oil companies. Now, foreign oil companies are keen on going back into Iran, but the important thing is the contracts, the Iranian petroleum contracts, how attractive it will be to major oil companies so that they can go into Iran and start rejuvenating their oil fields. Now that's the other process as well. Iran needs to strike a very fine balance in making those petroleum contracts. They need to please their own national oil company, their parliament, as well as oil companies. They are doing a roadshow here in London a few months from now, so the uptake from that will be very interesting as well. But as of now, I would say be very cautious in terms of expecting new Iranian oil barrels into the market this year.
Oh, really? In that case, how would you see crude prices, say, in the fourth quarter of 2015, and more importantly, in the first half of 2016?
Right, so the prompt month contract for oil is, in our view, likely to average around $66 a barrel in Q4, so not much lower from where we are at the moment. The real impact would be felt in the back end of the oil curve. So if you look at June 2016, December 2016, that's the part of the curve that will start flattening. So the effect that we see on the oil market from this is a flattening of the curve. Currently it's upward shaped, i.e. in a contango. That is likely to fade and become more flat, because not only do you see the market factoring the incremental Iranian barrels, but it also factors in things like the next OPEC meeting, which will be a very important one, because the prior one, they did not even negotiate terms with regards to how they'll welcome Iran back into the market. And it almost seems like Saudi Arabia is producing quite a lot of crude at the moment at 10.5 million barrels per day. So a number of things to look out for, but our price target for Q4 is $66 a barrel for Brent, and a flattening of the oil curve.
All right, thanks a lot for that, Mahesh. So that's the price. I mean, $66.